you pick the right stock at the right time.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Arvind. The headlines. Asian markets are off to a muted start after a two-day rally. The dollar is perched at its 16-month high while oil prices fell overnight. And India's base of doing business, or rather ease of doing business rankings improves after the second year straight in a row. It's now ranked 77, an improvement of 23 places on the World Bank Index. And Larsen & Toubro surpassed analyst estimates in the second quarter despite an exceptional gain. The infrastructure and construction major retained its revenue and revenue order inflow and guidance for the remainder of the year. And lower sales for Jaguar Land Rover led to Tata Motors reporting a wider than expected loss in the September quarter. The company says it has a turnaround plan for JLR in place. And among the Nifty earnings, Hindustan Petroleum and HDFC will be reporting numbers today. Now, the US markets rose sharply for the second straight session as strong earnings from the General Motors and Facebook lifted sentiment, but the major averages still posted a big October losses, and Bloomberg's Abigail Doolittle wraps up all the Wall Street action in this report. Listen in.
Stocks rallied in Wednesday's Wall Street session with each of the major averages of the Dow, the S&P 500, the Nasdaq, all climbing by about 1% or more. In fact, for the S&P 500, the Nasdaq, it was the first two-day gain for each of those indexes since the end of September, really speaking to the bearish action that we've seen in October. But before breaking that down, it was indeed a bullish day. The Nasdaq's last 2 days, the best since June of 2016. So really the bulls out in force. Not surprisingly, technology, the best sector, up about 2.4%, driven by the likes of Apple, Microsoft, Cisco, and Nvidia, among others. In that new communication services space, Facebook really was the story, up 3.8% on a mixed third quarter, but investors looking past that and toward future plans, while the consumer discretionary space also bounced, helped out by Amazon, its first update in 4 days, up 4.4% as investors try to forget about the disappointing fourth quarter guidance. Now, that's all the good news. As for the less good news, though, the month of October, very, very bearish. Each of the major averages down 5% or more. In fact, the Nasdaq, that tech-heavy index, losing 9.2%. Its worst month since November of 2008, really putting the selling pressure that we have seen in the last month in context. That, of course, was after the collapse of Lehman in the midst of a financial crisis. That was the degree of the sentiment of the sellers in the month of October in 2018. And with the dollar higher in October, up about 2.3%, its best month since November of 2016, everyone's wondering what November of 2018 will bring. Probably some more volatility. In New York, Abigail Doolittle, Bloomberg News.
Okay, then let's take a look at the Asian markets, and we're seeing mixed cues coming in, especially given the fact that the Nikkei is trading lower at this point in time, down 1%. However, the Shanghai has been advancing right now by as much as 1.4%. But what does it mean for the SGX Nifty? Right now, we're largely flattish, not too much to speak for, marginally in the green. But with that, I'm going to toss it over to Darshan Mehta to take us through what we can expect in today's day of trade. Darshan, good morning.
Good morning, Agam. It's going to be muted at this point of time as well. What I can say, the SGX Nifty has moved into the positive. That's it. The global cues have been good. So that's and L&T came out with good, strong set of numbers. So they have a sizable weight on the Nifty. So probably that should move the Nifty. Now, SGX Nifty has moved up to almost 23 points. We are about the 10,400 mark, especially. So the Nifty futures will come in close to the 10,400 mark in trade. How did the ADRs pan out in trade? Most of them did well. Dr. Reddy's managed to rally 5%. Infosys, ICICI Bank, HDFC Bank, all of them rallying in trade as far as the ADR is concerned. What didn't do well was Vedanta, and Vedanta reacted to a post set of numbers that came in. Should react negatively here also. Stellar rally from the Nifty itself yesterday, up almost 200 points. But remember, this move comes in after a 100-point drop that's seen. So in an intraday, we've seen almost a 300-point move, and equally impressive moves coming in from the mid-cap and small-cap end of the market. Pull up the Nifty Bank, pull up the Nifty PSU Bank Index, and here also you can see traction that was there. So across across the board, there was buying activity that was happening. IT as a space did extremely well. The Nifty IT index was up almost 4%. The pharma index was up another 2%. So IT and pharma, the rupee beneficiaries were the ones that managed to gain significantly in trade. Now, if you're looking at what fund flows happened, FI sold in 193 crores, DI has bought in almost 1100 crores in the cash market. Now, if you're looking at how the Nifty panned out in trade, 188 points up on the Nifty. HDFC was one of the key beneficiaries. Remember, HDFC will come out with numbers today. ICICI Bank, Infosys. So banks, financials, as well as IT were the counters that led to the rally. Coal India, because of the OFS, was down. Dr. Reddy's, because of the issues of its plants, were down. Maruti, again, weak set of numbers. And the auto companies, again, today will be in focus because of the auto sales numbers that will come in. As far as the futures market is concerned, let's pull up the Nifty futures, and you could clearly see there was fresh buying. Open interest was up 5%. Pull up the Nifty Bank, and you could see the open interest up almost 1.7%. So there was a traction that was happening on the positive side. 10,200 is the big support for the market, the first support for the market, and the ultimate support is the 10,000 level. Time and again, we've seen that the bears want to crack the 10,000 level, but it's not happening. It's bouncing back from these levels. Again, today in today's trade, what the SGX Nifty is indicating, there will be more writing on the 10,200. There will be more writing on the 10,300, and the call writers will be forced. The call writers are the green lines. They will be forced to shed positions because their premiums will go up significantly, and they will make losses. What happened in trade yesterday? Yes, you can see it will be a similar scene of what you're seeing in trade yesterday. It will be similar to what we can expect today. Call writers will be forced to shed positions, and put writers will become active. So that's the trend that we are seeing. As far as stocks in the ban is concerned, there are no stocks in the F&O ban. PCR moved up to 1.56 for the Nifty. The Bank Nifty PCR again is above the 1 level at 1.27 from 0.89. Couple of, if you're looking at the stock specific views, there were a couple of counters that saw open interest build up. So look at the open interest build up that was seen on counters. Coal India, obviously on the fresh short side, open interest build up of 84% on because of the OFS. Cummins India, strong set of numbers that moved. CSC again now trades X the retail division, X the BPO. You have Syndicate Bank, which came out with poor set of numbers that came in after market hours. That probably will react negatively today. But look at the open interest built up on the short side yesterday. So positions were already built in ahead of the numbers that came in, and Allahabad Bank reacted positively to the numbers that came out that was there. In terms of open interest decline, again, you could see short covering continue in Dewan Housing. Piramal Enterprises saw short covering that came in. BPCL yesterday saw short covering that came in. So most of the counters here on your screen saw short covering that came in yesterday.
Darshan, thank you for that. Of course, we'll be watching out for Larsen and Toubro as well, and how that reacts in trade. Thanks, Darshan, for getting us those details when it comes to the futures and options space. But we'll shift focus to commodities market then, and we have Yash Upadhyay joining us to give us all the updates. Yash, good morning.
Good morning, Agam. So crude oil prices, they capped their worst monthly run in over 2 years, with crude oil prices correcting by more than 11% in the month gone by, the most since July 2016, as concerns over the global economy slowing down and rising crude inventories corrected the prices by as much as 1.3% in yesterday's day of trade. Now, on top of demand concerns, the biggest factor that most of the economies will be watching out would be the impact of the Iranian sanctions, which would kick in from November 4th, with many taking a view that Saudi Arabia and OPEC will be pumping enough oil to fill in the supply shortage. Most base metal names, they ended lower in the month of October, led by sharp cuts in lead and zinc, which posted their fifth straight monthly loss. Aluminum and copper being the other two names with cuts of almost 2%. Gold posted its first monthly gain since March, ending the month in excess of 2.5%.
Thanks for that, Yash. We'll be watching out for some of those commodities and how they pan out. But moving on, perhaps some important news coming in, even as India has jumped 23 places on the World Bank's Ease of Doing Business Index, as the country's made it easier to start a business and deal with construction permits. Now, India ranks highest in South Asia at 77, up from 100th position last year. However, enforcing contracts still remains a huge problem, as the World Bank report shows that it takes more than 3 years to enforce a contract. Ramesh Abhishek, Secretary of Department of Industrial Policy, told Bloomberg Quint that reforms are being put in place, and it is just just a rather matter of time before they show up in the rankings. He's also added that they are in the process of drafting an industrial policy for the sustainable growth of all business enterprises in India. Listen in.
In 5 indicators out of 10, now we are in top 80. In 3, we are in top 25. In 2, we are in top 80. So, in other 5, we have to do better. Registering property, enforcing contracts has been 2 major challenges in the last 4 years. But then, registering property, digitization of all the land records, property records in the municipal areas, registration offices getting completely digitized, all that is being done is going to take some more time, and we are definitely hopeful that in the coming days and months and years, things will get much better. So, but that is one of the more difficult reforms, but we are definitely on track, and we are hopeful that there will be some improvement next year as well. We are in the process of drafting an industrial policy which will become a roadmap for sustainable growth of all business enterprises in India. There we are addressing the major issues, including the labor issues, infrastructure issues, and so on, innovation ecosystem, skilling and reskilling, Industry 4.0. So those issues we are looking at in the industrial policy that is likely to be approved by the government in the near future.
Moving on to earnings, Tata Motors reported a loss for the second consecutive quarter, weighed down by a weak performance at its units, Jaguar Land Rover. And to rejuvenate the sales, JLR aims to drive profitable growth in China by capitalizing on the growing premium market. They're in addition to taking advantage of reduced import duty from the 1st July. Despite the uncertainty over demand in China and Europe, the group CFO, PV Balaji, has retained its EBIT margins guidance of 4 to 7% for 2019 through 21. Listen in.
We will continue to drive turnaround 2.0. That's something that's working well for us. We'll step on the gas there. And as far as the EBIT is concerned, given that we have delivered 4.5% EBIT this quarter, we're now wanting to inching up our targets from what used to be a 3 to 5%. We're now taking it up to 4 to 6%, which is a sign of confidence that the turnaround 2.0 is delivering for us. And of course, the fit for future portfolio decisions is something we'll continue to execute flawlessly.
Well, Larsen & Toubro's earnings beat the street expectations, even as the most optimistic estimate in the second quarter. And Darshan Mehta is standing by to tell us about what's helped the numbers this time around. Darshan, over to you.
Yeah, so strong set of numbers. We were expecting a 10% growth on the top line. They've come out with a 20% growth. So 21% growth on the top line, almost 32,000 crores is the top line that has come in. Our estimate was close to 29,000 crores. Even on a profit front, it's come in at almost 2,200 crores versus our estimate of 1,650 crores. Margins have come in much better. A growth of 27% on the EBITDA. Margins have now 11.7%. No doubt there was an exceptional gain this time around of 295 crores compared to 137 crores last time around. But even if you exclude that, the numbers are rather stronger. They're saying that the L&T in its report has indicated the fact that improved in execution in the projects and services business that did well for them. They've bagged orders worth almost 41,900 crores, much higher than the most optimistic estimate that was close to 40,000 crores. So even on the order front, yes, it's doing well. Infrastructure, hydrocarbon, heavy engineering, power, all of them contributed significantly. The consolidated order book now is at almost close to 3 lakh crore. So there is enough traction that is there. If you're looking at the growth that came in, infrastructure did well for them, heavy engineering did well for them, hydrocarbons did well for them. As far as the margins are concerned, clearly margin improvement was seen despite a drop in revenues on the power segment. Margins improved on the power segment, margins improved in the defense segment, margins improved in the heavy engineering segment for them. So there was traction. The IT and financial businesses subsidiaries, they managed to do well. On the guidance front, management has said that they are maintaining the guidance, 12 to 15% top line growth, and an order inflow guidance of 10 to 12% is something that the management indicated. But expect the counter to react positively to the numbers that came out today.
Right, Darshan, thanks for that. But moving on, mining giant Vedanta, which also came out with its numbers, failed to meet estimates after its zinc and aluminium business saw a drop in operating profits. Nikki Mirchandani is here to take us through the numbers. Nikki, good morning.
Hi, Agam. Vedanta did not post a good set of numbers. We're looking at an extremely disappointing set of numbers coming in from Vedanta. If you look at the performance, it was an operational miss that we saw there. Overall, it missed the estimates from quite a margin. If you're supposed to look at the revenue, that was up by as much as 5%, a little better than the estimate. Reported net profit was down by as much as 34% for the counter against the at a number of 1,343 crore. EBITDA was down by 8% to 5,208 crore. Margin stood at 22% as compared to 26%. Profitability notably included the exceptional gain of 320 crore, which related to the reversal of impairment of oil and gas business and some arbitrational reversals at aluminium business. What really goes behind the making of the numbers, revenues were aided by the higher volumes that we saw in aluminium and higher availability at the power plant. But then the EBITDA overall was dragged on account of zinc international and aluminium business. We also saw a higher finance cost, depreciation, other income weighing down on the bottom line performance of the company. Finance cost was up as much as 10% for the company to 1,571 crore. Other income too was lower by 36%, and depreciation rose by 28% for this counter. We had also we attended the con call where the guidance in itself was also not encouraging. Oil and gas volumes were cut for 10 to 15% in FY19. Clearly, it's one of the good chunk that is contributing towards the operational performance of the company. So a cut in that definitely doesn't augur well. And also the zinc international business, there also the volumes were revised down to 75 KT as compared to 100 KT earlier.
Thanks for that, Nikki. But moving on to earnings that we're expecting today, we have state-owned refiner HPCL, which is expected to hit by rising crude prices. Sumit Sarkar is standing by with what the street is pricing in. Sumit, good morning.
Good morning, Agam. Now, if you see for HPCL, the street is expecting it to be a muted quarter. Now, if you see the headline numbers compared to last quarter, the revenue is expected to be higher by nearly 8% for HPCL to close to 73,000 crore rupees, while EBITDA that is expected to decline by nearly 13% to close to 2,800 crore rupees. Margins that are expected to contract to nearly 3.8%, while net profit is expected to decline nearly 13% to close to 1,500 crore rupees. Now, gross refining margin, that is the key number for the oil marketing company, now that is expected to come in at around $5.58 per barrel versus $7.15 per barrel reported by the company in the last quarter. Now, GRMs are expected to decline because of lower inventory gain that the company is expected to report in the second quarter of financial year 2019. Now, inventory gains are expected to be lower because of a relatively lower hike in crude oil prices, which would result into small inventory gains for the company. Now, Brent crude averaged only 1% higher at close to $75.89 per barrel, and that is the reason why inventory gains are expected to be lower for OMC in the second quarter. Now, if you see the fuel margins, now that was steady in the second quarter. Now, gross marketing margin earned by HPCL on sale of every litre of petrol, now that averaged around 1.6 rupees per litre versus 1.5 rupees per litre reported by the company in the last quarter, while on diesel it averaged around 2.2 rupees per litre versus 1.9 rupees per litre reported by the company in the last quarter. Now, on the operational side, if you see, the crude throughput is expected to be higher by nearly 4% to close to 4.7 million metric tons, while sales are expected to be down by nearly 3% because of a seasonal weakness seen in the second quarter compared to last quarter. Now, key things to watch out for now, that would include the company's crude sourcing strategy amid the Iran embargo and the decline in Venezuela crude production that we have been seeing, and also update on the future capital expenditure and status of the Visakhapatnam refinery expansion project would be key things to watch out for from HPCL second quarter earnings.
Sumit, thanks for that. We'll be watching out for HPCL's earnings going into trade today. But as the ongoing tussle between the RBI and the government reaches fever pitch, Arvind Panagariya thinks the media is highly dramatizing the row between the two. And in a chat with Queen's Sanjay Pugalia, former vice chairman of NITI Aayog, added that even if the government invokes Section 7 of the RBI Act, it is well within its constitutional realms to do so. Listen in.
सरकारों में डिफरेंसेस हमेशा होते हैं और आरबीआई और जहाँ तक सरकार का सवाल है बहुत लंबा इतिहास है हाल ही के इतिहास में जो है दो गवर्नर ने जो है इस स्थिति में पहुंच गए थे कि वो रिज़ाइन करने वाले थे तो ये जो है डिफरेंसेस आरबीआई और सरकार में रहे हैं अभी क्या हो रहा है आपको हमको डिटेल्स नहीं पता, मुझे तो नहीं पता, शायद आप रिपोर्ट आपके पास सोर्सेज ज़्यादा होते हैं, आपको पता होगा, पर मुझे सिर्फ जो है स्पेकुलेशन चल रहा है मीडिया में, वही मैं देख सकता हूं, पर उसके आधार पर मैं कोई कमेंट नहीं कर सकता।
मैं अपनी पोजीशन साफ करता हूं, मैं कोई तरफदारी वाली बात नहीं कह रहा हूं आरबीआई के बारे में, मैं तो ये समझना चाह रहा हूं कि ऐसी क्या आफत आई है, आरबीआई ने ऐसा क्या किया है कि सेक्शन 7 की सोचने की जरूरत पड़े।
मुझे जब तक इस सब के डिटेल्स पता न हो इस बारे में कोई निर्णय लिया नहीं जा सकता। और पर आपको ये मैं ये बताऊं कि थोड़ा सा इसलिए मैं कह रहा हूं आपको ये केयरफुल होना ज़रूरी है कि सरकार अगर मान लीजिए कि सेक्शन 7 का यूज़ हुआ तो इसमें सरकार कोई कॉन्स्टिट्यूशन के बाहर तो नहीं गई,
नहीं, आई एग्री,
विद इन लॉ है।
हाँ
तो इसलिए इतना ड्रामेटाइज मत कीजिए आप। ये है कि सेक्शन 7 को कभी यूज नहीं किया गया है, सो दिस विल अगर कभी होता है तो पहली बार होगा।
यू वुड बी ओके अगर ये
नो आई एम नॉट सेइंग सेक्शन 7 इज देयर and if you are saying that it should never be used, no, with that I disagree, क्योंकि अगर सेक्शन 7 हमने रखा है कानून में,
so allow me to rephrase,
किसी ने किसी कंटिजेंसी इमरजेंसी सिचुएशन में यूज करने के।
Well, that's Arvind Panagariya there on the matters of Section 7. But moving on, we have Nikki Mirchandani joining us back to give us a list of stocks that we need to keep an eye on the back of news. Nikki, over to you. Nikki, over to you on stocks and news.
Yeah, sure. I'm going to start off with Bosch India first, where the company is going to be considering the share back proposal on November 5th. Second we have on the list is IndusInd Bank, where the bank has exposure of around 3,025 crore to IL&FS Group. We're expecting negative development on back of that, which forms of around 1.8% of Q2 FY19 loan book. Exposure is to the tune of around 2,000 crore to the holding company and around 1,025 to operating entities of the group. Coal India OFS non-retail category has been subscribed by 106%. So it's clearly with this the government can now exercise the oversubscription option, given the green shoe option, given that it's an oversubscription by as much as 6%. Adani Enterprises, which is nearing the finance deal for stalled Australian coal mine project, the company is going to be reconsidering the mine plan for its Carmichael coal project in Queensland with lower initial capital investment right now. So that's one development that we like to keep an eye out on. Also, we are going to be talking about bunch of other earnings. United Spirits, a good set of numbers reported by the company. Revenue up by 14%. Net profit, we've seen a 69% jump there. EBITDA up, margin multi-quarter high. HEG, good set of numbers reported by the company. Top line up by 4.4 times. Net profit up by 7.8 times. Canara Bank, good set of numbers reported by the company. We've seen the NII up by 18%. And if you look at the GNPA, that's a healthy performance on asset quality, 10.56 as compared to 11.5% sequentially. Syndicate Bank, well, mixed set of numbers. NII is down by 4.7%. The bank has registered a net loss. But in terms of the asset quality, that pretty much remains stable at 12.9% as compared to 12.6%. A little deterioration though on sequential basis. Castrol India, again a weak set of numbers that we're talking about. Revenue up by 7.6%. The profitability is declined by as much as 15%, and the EBITDA of the company is down by 10%.
Nikki, thanks for that. We'll be watching out for those stocks. But moving in, there is lots to talk about through the course of the day, and you will find all the market action live on Bloomberg Quint. And there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Now, China's leadership has signaled that further stimulus measures being planned, as disappointing economic data showed that the current piecemeal approach isn't working. And a revival plan presented by IL&FS was accepted by the National Company Law Tribunal today, paving the way for resolutions of debt-laden conglomerates' problems. Now, yoga pants have officially surpassed jeans sales in the US for the first time. So are yoga pants the new denims? Here's more. Well, with that, it's a wrap on this edition of Daybreak, but don't go anywhere. All you need to know is up next. Stay tuned to Bloomberg Quint Live.